Hello,
Hey, how are you?
I'm doing well. How are you?
I'm fine. I'm great. Thank you. Thank you so much for doing this.
Of course.
So you're in LA, right?
Yes, Los
Oh,
Angeles.
okay. Is California as bad as they say it is? Because I keep hearing so many terrible things about California, and I don't know if somehow like libertarians are like amplifying the thing to make it sound terrible.
They do amplify it. There are definitely problems here. There are problems everywhere. Um, but I think every government has its issues and, tries to get better. And you have
Sure.
people within the place that want to make it better. So, um, we are definitely, at a little bit of a disadvantage to other states right now within the United States because of our policies. But I still think that there's some really good protection here as well relative to some of the other parts. There's a lot of stuff that happens in Texas and Florida that doesn't
Yeah,
get
yeah.
publicized.
Yeah, I was
um,
that was what I was willing to ask is are you moving to Miami or Austin anytime soon?
Absolutely not.
Okay.
Absolutely not.
Okay. So let's talk a little bit of Bitcoin if you're okay with that.
Sure.
Um, so first time I heard about you and learned about your stuff is of course I don't know if I should say of course, but through your book, right? Which I listened to, and it's very weird to listen to Bitcoin books these days because it's always the same guy reading them. Guy, Guy, I don't know how we should say that. And I will talk to him soon. That's a funny thing. And I always have this feeling like every Bitcoin book now is like a big book in my head because of the same voice reading them. And what was very interesting to me is the fact that in your book there are some graphs, some charts to look at with different layers and the evolution of layers through time. And the first question that I wanted to ask you is why do you think that every money in the world always ended up being built on layers? Why is it even for Bitcoin that gold had to have layers on top of it? And do you think that we will see more layers that we don't anticipate right now on Bitcoin in the future? Because everybody is talking, of course, about the Lightning Network, or some people are also talking about Liquid and things like that. But do you expect more layers to come? And if yes, do you think there will be 3, 4, 10? Will we build a world on top of the Bitcoin Foundation? How do you imagine that?
Yeah, so Bitcoin and other currencies follow this layered framework because there's always going to be a trade-off in money. There's the trade-off of safety and speed, basically. And with gold, you can imagine that gold coins were not great for speedy transactions and not great for international transactions. Those are often done with just accounting and I think that the rest of the monetary universe follows this similar idea that you don't always have to move the best money, the safest money around the world. You can move a less safe money to really de-risk the transaction. If you send gold coins on a ship across the Mediterranean Sea, you have a full risk there of your money as opposed to if you use some sort of layered credit agreement or a money substitute or paper money, you're de-risking the transaction both for you and the recipient. So in that way, I think if you read the book, you see that money always follows this type of layered framework because we really do need to trade off safety and security when we're doing different types of transactions. In Bitcoin, we obviously have the Lightning Network and we have Liquid, so we have a layered framework already developing within Bitcoin. We also have the simple idea of exchange balances. Exchange balances are not a first layer Bitcoin per the framework. They're a second layer because you have counterparty exposure to the exchange. The exchange could disappear tomorrow and you lose all your Bitcoin. I think that we might see third, fourth layers of money develop within the Lightning Network or within other areas. And that would be a natural progression. The more layers that you have, the more layers of counterparty risk that you have. And but some people accept that risk in order to use the money for what they require from the money. So if we think about Venmo, we have, I'm not really sure the technology that you're using in France to send money peer-to-peer, that, you know, just sending euros from one app to the other. But in the United States, a lot of people are using Venmo. Venmo can be thought of as like a fourth layer money, because it's, well, first of all, it's a subsidiary of PayPal. And then PayPal is using the banking system to send money. And then the banking system is using reserves. So there is quite a, you know, layered system just in the peer-to-peer dollar transfer that we have. And so, you know, that kind of thing could develop in Bitcoin for sure, where people are sending Satoshis to each other, but they're doing it within an app that is custodial, and the app uses Lightning Network as their anchor, but you're not actually transacting on the Lightning Network. You're just transacting within this one company's environment. So you have full counterparty risk to that company. That company has then exposure to Bitcoin via the Lightning Network. And then they have some sort of risk with their channel management that they have to settle then to the main chain. So layered money is past, present, and future.
So basically, it's a very smart way to increase velocity too, right? Because if you don't, I mean, the fact that gold was heavy and difficult to transport is often referred to as a flaw by Bitcoiners, but I also think it was one of its strengths and what made it so rare and able to be real money for so long, because you couldn't, something very light, very volatile, versatile, you can find everywhere. You can, gold has to be hard to move to be valuable, like Bitcoin some way. And the second thing you just said make me think, I see the parallel between Venmo, where there is basically no settlement between anybody. Probably the settlement happens very long after when you send money to your friend. I could see the base layer, the layer one Bitcoin chain being a settlement layer for Lightning, and Lightning being a settlement layer for other layers. That's very interesting. I didn't think about it this way. The second question I wanted to ask you, I loved, because I subscribed to your Substack, I loved an article you've written lately. I shared with many friends, because the most annoying thing that happens to me every day is, oh, I finally bought some crypto because you told me so. And oh, nice. How many Bitcoin do you own? How much percentage of your portfolio is it? Is it like 90%? And sometimes they're like, no, it's 0, right? And it happened to me like 3 days ago. Again, a friend of mine that I was pushing to buy Bitcoin back in the days when it was at 3,000 just came, I finally bought some crypto, and nice, and I was happy. Finally you got convinced. I bought some Chainlink and things like that, and I went, oh my god, you didn't listen, right? So could you summarize, in your opinion, for everyone listening to this and not subscribed to your Substack, what your answer is when people tell you, oh, I bought some crypto instead of about some Bitcoin, and how different they are?
Yeah, so the article you're referring to is called Bitcoin and Crypto Are Not the Same.
Yeah.
And I published it last week. And I think that it did register with a lot of people, because I also get this question, what crypto should I buy next? I get that question all the time. And my answer is that Bitcoin and crypto are different asset classes. Bitcoin is a commodity. It's a neutral asset. It doesn't have any company or country associated with it. And essentially every other cryptocurrency has either a company or a center or a foundation or some sort of committee that makes decisions about it. And so from that perspective, cryptos are tech startups. They're companies. They are projects. They have an owner or a center. They can be shut down by a government. They can have their servers shut off. Bitcoin,
AWS.
yes, of course. And Bitcoin is its own asset class. It is truly decentralized. It does not have a company, a CEO, a committee, a foundation that is making decisions. And it really is a commodity. And so, the basic answer is that you can buy Bitcoin, the commodity, or you can invest in tech startups. You're welcome to invest in technology companies. They might even make a lot of money. Part of the article showed that, a cryptocurrency called Solana is up 11,000% this year. So, and Bitcoin is only up, less than 100%. So you can definitely make more money potentially in all these other startups if you're willing to do that research and understand what's going on, but they are not the same thing. I am a global macroeconomic investor. I spend my mornings and nights reading about the Federal Reserve, about China, about geopolitics, about the European Central Bank, what they're doing. I'm not reading about individual technology companies. And so Bitcoin fits into my research funnel, and the rest of crypto simply does not. So when people ask me what crypto should I buy next, I say, sorry, I know nothing about that asset class.
I see. You don't even compare them, right? Yeah,
No.
yeah. I think that's the best thing. And what my friend told me 2 days ago is basically, yeah, but Bitcoin is too expensive now, and that
Too expensive.
drives
Yeah.
me crazy because every time I told him that every time you buy Bitcoin for the first time, it looks expensive. Every time, it's the same for everyone. Just to give you a little hint about myself. First time I bought Bitcoin, it was 80 cents. I swear on God, it was 80 cents. I had no idea what it is. It was like 2011. And I just bought it because I was selling some products online. It was the fastest way. Earlier, I was using another thing, another cypherpunk money, which was called Liberty Reserve, that was a centralized shitty project, but was aiming to do kind of the same thing. And I sold it for like $100. All of my Bitcoin, I had hundreds of them for $100, and I was so happy. I made the best trade of my life. And then it was 300, and then 1,000, and then it crashed back to 300, and then it goes. And every time I saw that, I was like, okay, oh, I didn't buy it at 1,000. How smart am I? Because now it's 300, and then it's 3,000, and I'm like, oh damn, I should have. And then I don't buy, and it's go back, and it was like that every time. And then I bought back in 2016 or 17 because I started to understand what it was. But it took me 6 years to finally be interested in Bitcoin. And all that during these 5 to 6 years, I was thinking to yeah, it's too expensive. It's too expensive. And now I tell people, imagine in 10 years when you will look back and Bitcoin will be 1 million, 5 million. I don't know what price. It will look so cheap now. So it's like an entry point bias that you always look at the current price, and you look at the past and you're like, oh, I missed it. And then you get crushed because you may put all your money on shitty projects that claim they can do better, and you don't understand what you're doing. But somehow it's the crest of your lesson, right? You pay, you lose, and then you start thinking, okay, maybe I should have bought Bitcoin, right? So the next and last question I wanted to ask you, because the idea is to make it short and smart. Where do you see the future? I have 3 theories. One, hyper-Bitcoinization. Everybody knows what it is. It's the Bitcoin standard. Everybody uses it. There is only one currency. Everything else dies. The second one is, for me, is like there is Bitcoin and there are CBDCs, and everyone is trading between them, and you store your value in Bitcoin, and you have your wallet on your phone with CBDCs, and you share them, and you use them for day-to-day transaction. And you don't want to use your Bitcoin, so you keep your money in Bitcoin. And the third one, which I like most, but I don't know about you, is I think Bitcoin will force the world to go back to a free banking system, with everyone making their own currencies, and every currency being having its own trade-offs, and maybe some are highly reserved currency with over collateralized in Bitcoin or things like that, and others are more risky and things like that. Where do you see the world economy on a mean of exchange perspective in like 5 to 10 years, in your
So
opinion? Of course,
I
it's a
like
wild guess.
I like your third option, the free banking. The only problem with that is governments, if you look at the way that the US government is treating stablecoins right now, they're basically saying that every single stablecoin issuer needs to be regulated as a bank. And I actually somewhat agree with that because stablecoin issuer is a bank. By definition, they're issuing a banking liability that is treated as a monetary instrument, and which is the same thing as what a commercial deposit is at, your average bank, like Bank of America or Wells Fargo, BNP Paribas, Societe Generale. There's all these banks that issue liabilities that we use as money. And so I would like to see free banking develop, but where's the jurisdiction that those things will happen? That is less known. And so I'd like to see that develop in jurisdictions that are open to that, but the number of jurisdictions that will be open to that sort of activity is limited right now. It won't be in the United States. It won't be in the European Union. It might be in Switzerland, and so we have to think about that. I don't believe that Bitcoin will be the only currency on the planet in 10 years. And I definitely see central bank digital currencies coming into existence, and a healthy, liquid, transparent market between Bitcoin and CBDCs. I do anticipate to develop, and that will bring more transparency to the foreign exchange market. I think it'll actually kill many government currencies over time, as more transparency is brought to different currencies, government currencies. We can actually see how much supply of each current of those fiat currencies there is. That will blow people's mind, and it will kill the idea that certain currencies are actually relevant, useful, and a good store of value. The dollar and the euro will be the longest standing. And so that's kind of how I see it playing out over the next 5 to 10 years.
Okay, and you don't think that game theory would play a role if small jurisdictions come to accept and encourage free banking, and we see some new ecosystem emerge in that? Don't you think that regulatory decisions could follow in big countries like the United States and in the Europe Commission to try to compete with it, or do you think they will?
Regulatory arbitrage is very powerful. I do agree with that. Jurisdictional arbitrage is very powerful, but the United States will be last. That's, I mean, the most entrenched, powerful country in the world, entrenched from a dollar perspective and how the world economy operates. They're not just going to relinquish it for Bitcoin free banking tomorrow. But that doesn't mean you won't see it, happening in Singapore and then other Asian countries and other Latin American countries, African countries. They'll all respond to each other, and that will drive a lot of Bitcoin adoption. But that sort of thing won't affect the United States to just let Bitcoin free banking and relinquish their control of the dollar and the way that they can collect taxes and raise revenue in the United States and even from other countries, like import duties and all that kind of stuff. That is going to still stay in the dollar for the time being.
So you agree with Michael Saylor that most currencies will die, the stronger one will survive, and then the world will adapt around that, and maybe the US will be last because of I listened to Jeff Booth yesterday that was saying something similar about the fact that the US will be the last one to see the real change coming and to adapt it and embrace it because of the fact that they are so powerful and privileged. So you agree with this position?
Yes,
right?
yes, I basically agree with that, and I think that we'll go from 190 currencies today to well under 100 government currencies over the next 10 to 20 years. That's a pretty bold prediction itself. So trying to predict what happens after that is very difficult.
Sure. Well, thank you so much for everything. I loved talking to you. It was so precise. I loved it. I hope you enjoyed this 20 minutes together, and I hope we could do that some other day, maybe in the future.
Absolutely. Take care. Thanks for having me on.
Thank you, sir. Thank you very much. Bye.